3 words that can help you challenge bank fees. Instantly, most seniors have never heard them. Imagine discovering that just 3 simple words could completely change the outcome of a conversation with your bank. Most seniors have never been told about them, not because they're difficult to remember, but because banks have little incentive to make sure customers know they exist. Every year, many Americans over 65 lose hundreds of dollars to monthly maintenance fees, overdraft charges, ATM fees, and other banking costs. In many cases, these charges can be waived, reversed, or refunded when customers know how to request a proper review, yet most people simply accept the fees because they assume the bank's decision is final. Banks rely heavily on automated systems that apply fees to accounts without considering individual circumstances. Those systems are designed to process charges automatically, and many customers never question what appears on their monthly statements. As a result, money quietly disappears from Social Security benefits, pension payments, and retirement savings month after month. In this video, you'll learn the 3 powerful words that can change the conversation with your bank. More importantly, you'll discover the exact phrases to use, when to use them, and why they often lead to a supervisor review instead of an immediate rejection. You'll also learn the legal and regulatory principles that encourage banks to investigate disputed fees more carefully. If you're new to this channel, be sure to subscribe. Every week, we share easy-to-understand information about banking rules, retirement finances, taxes, and government programs that can help seniors protect their hard-earned money. Everything is explained in plain English with no products to sell. Before we begin, let's address 2 common misconceptions. The first comes from people who have already called their bank and were told a fee could not be refunded. That experience is extremely common, but it doesn't always mean the decision is final. Often the result depends on how the request is presented. A general complaint about a fee usually follows a standard customer service script. However, a request that references the proper legal or compliance review process is often handled differently and may be escalated to a supervisor for further consideration. The second misconception is that large national banks are too regulated to make mistakes. In reality, larger institutions process millions of transactions through automated systems, making errors and questionable fees more likely to occur. At the same time, these banks typically have dedicated compliance departments responsible for reviewing disputes when customers raise legitimate concerns. Throughout this video, I'll explain the 3 words that can trigger a closer review, show you how to use them for several common types of bank fees, and discuss what steps you can take if your initial request is denied. So why do banks continue charging fees that may later be reversed? The answer lies in automation and information. Most fees are generated automatically according to account settings rather than individual account reviews. The bank has teams of specialists who understand consumer protection rules, while most customers only see a brief charge listed on their monthly statement. That knowledge gap allows many unnecessary fees to go unchallenged. When customers understand their rights and know the appropriate language to use, the conversation changes. Instead of being treated as a routine complaint, the issue may receive a formal compliance review, giving the bank an opportunity to determine whether the fee should be refunded. Over the years, I have seen countless examples where longtime customers recovered months of maintenance fees or had overdraft charges reversed simply because they approached the situation differently. The circumstances had not changed, the words they used had. That is exactly what this video is designed to teach you. The language you use can make all the difference. In the next few minutes, I'll show you exactly how to communicate with your bank when questioning certain fees, and how to understand the rules that may apply. Here's what we'll cover. First, I'll introduce the 3 important words that can change the direction of a fee dispute. Then we'll look at how they relate to 6 common banking charges: monthly maintenance fees, overdraft fees, paper statement fees, minimum balance fees, wire transfer fees, and account closure fees. For each category, you'll learn a practical example of what to say, the banking policies or consumer protection rules that may apply, and the steps you can take if your first request is denied. I'll also explain how to submit a written complaint and when it may be appropriate to contact the Consumer Financial Protection Bureau, CFPB, if your bank does not resolve the issue. Now let's discuss the 3 words. Regulation E violation. These words are not magic, and they are not intended to intimidate anyone. They refer to a federal consumer protection regulation that governs many types of electronic banking transactions. Regulation E implements the Electronic Fund Transfer Act, which establishes rules for electronic transfers such as direct deposits, debit card purchases, ATM withdrawals, and certain related fees. Among other things, it requires financial institutions to provide clear disclosures about electronic fund transfer services and the fees associated with them. When a customer raises a concern involving Regulation E, banks generally recognize that the issue may require review by a compliance specialist rather than routine customer service. The conversation often shifts from a simple fee complaint to a request for a formal review under applicable consumer protection rules. Let's look at the first common fee: monthly maintenance fees. If your account agreement states that monthly maintenance fees are waived when certain conditions are met, such as receiving qualifying direct deposits or maintaining a required balance, but the fee was still charged, you should ask the bank to review your account based on the terms of your agreement. The key issue isn't simply that the fee exists, it's whether the bank applied its own account rules correctly. For many retirees, Social Security or pension payments are deposited electronically every month. If those deposits satisfy the waiver requirements listed in the account agreement, but monthly fees continued to appear, it's reasonable to request that the bank investigate and explain why. Customers who maintain higher account balances should also verify whether they consistently met the minimum balance requirement that qualifies for a fee waiver. If the representative declines your request, politely ask whether the matter can be reviewed by the bank's compliance or account resolution department. Keep a record of every conversation, including the date, time, and the name of the representative. Good documentation can be valuable if you later need to submit a written complaint. One simple action you can take today is to download your account agreement from your bank's website. Search for the section titled Monthly Maintenance Fee and carefully review every listed waiver condition. Compare those requirements with your own account history. If you believe you met the conditions but were still charged, contact your bank and request a detailed review. Overdraft fees on debit card transactions. Another important area involves overdraft fees on one-time debit card purchases. Under Regulation E, banks generally cannot charge overdraft fees for certain debit card or ATM transactions unless the customer has previously agreed or opted in to overdraft coverage for those specific transactions. If you don't remember authorizing that service, you can ask the bank to verify whether an opt-in agreement exists for your account. Request that the bank provide documentation showing when and how you enrolled in debit card overdraft coverage. If the bank cannot verify that authorization, ask for a review of any overdraft fees charged on those transactions. This issue is especially important for retirees living on fixed incomes, where the timing of Social Security or pension deposits can sometimes create short-term account shortages. Reviewing past overdraft charges may reveal fees that deserve a closer look. Understanding your account agreement Keeping accurate records and asking informed questions are often the most effective ways to resolve banking fee disputes. For retirees who maintain larger account balances, overdraft fees may occur less often, but it's still worth reviewing your account history. If you were charged an overdraft fee that you believe was applied incorrectly, you have the right to ask your bank for an explanation and request a review. If your bank denies your request, ask for written documentation showing that you authorized overdraft coverage for one-time debit card transactions. Request that the information be sent by email or mail so you have a record of the response. If the bank cannot locate the documentation, ask how it determined you had opted in and request that the fee be reconsidered. One simple step you can take today is to call your bank and ask, "Do you have a signed overdraft opt-in authorization on file for my debit card transactions?" Write down the representative's name, the date of the call, and exactly what they tell you. Fee Category 3. Paper Statement. Fees. Now let's look at paper statement fees. If your bank recently began charging you for receiving paper statements, ask when the fee was introduced and whether you were given clear advance notice before it took effect. Federal disclosure rules generally require banks to provide customers with notice before certain account terms or fees are changed. If you don't remember receiving a separate notice, ask the bank to provide documentation showing when and how the notification was delivered. For many older adults who prefer paper statements, these fees can quietly add up over time. While the charge may seem small each month, it can become significant when applied across multiple accounts or over several years. If the bank declines your request, ask 3 specific questions. On what date was the advance notice sent? How was it delivered? Was it provided separately from my regular monthly statement? If the bank cannot clearly answer these questions, ask that your account receive a formal review. Here's one action you can take today. Review your bank statements from the past 2 years and look for entries such as paper statement fee, statement delivery fee, or similar charges. Add up the total amount and contact your bank to ask whether those fees were properly disclosed before they were introduced. Fee Category 4. Minimum Balance. Fees. Another common charge involves minimum balance fees. Many checking accounts waive these fees if certain conditions are met, such as maintaining a minimum balance or receiving qualifying direct deposits. Review your account agreement carefully to determine which waiver conditions apply to your account. If your direct deposits consistently met the bank's stated requirements but you were still charged a minimum balance fee, ask the bank to review your account and explain why the waiver was not applied. For retirees receiving regular Social Security or pension payments by direct deposit, this is especially important because those deposits may satisfy the account's fee waiver requirements. Customers with higher account balances should also compare their monthly balances with the minimum balance threshold listed in the account agreement. If your balance remained above the required amount and the fee was still charged, request a correction. If your initial request is denied, ask the bank to provide a written explanation describing why the fee waiver did not apply during the period in question. A written response creates a record of the dispute and often results in a more thorough internal review than a brief phone conversation. Before ending today's video, download your account agreement and identify every condition that qualifies for a fee waiver. Compare those requirements with your account activity. If you believe a fee was applied in error, contact your bank and request that the charges be reviewed. Before moving on, take a few minutes to review your account agreement online. Look specifically for the section explaining minimum balance fees and the conditions under which those fees are waived. If your account receives regular Social Security or pension direct deposits, check whether those deposits qualify you for a fee waiver. If they do, and you've still been charged, you may have grounds to ask the bank to review those fees. Fee Category 5, Wire Transfer Fees. Let's move on to wire transfer fees. Banks are expected to clearly disclose the fees associated with wire transfers before the transaction is completed. If the amount you were charged is higher than the fee listed in the bank's published schedule or the amount you were told in advance, you should contact the bank and request an explanation. Ask the representative to compare the fee charged with the fee schedule that was in effect on the date of your transfer. If there is a difference, request that the bank review the transaction and refund any amount that exceeded the disclosed fee. One reason this type of dispute is relatively straightforward is that the evidence is easy to compare. The fee shown on your bank statement can be matched against the bank's published fee schedule. If the numbers don't match, ask the bank to explain why. If your request is denied, ask for a copy of the fee schedule that was effective on the exact date of your wire transfer. Having that documentation allows you to verify whether the correct amount was charged. A good action to take today is to review your bank statements from the past year and list every wire transfer fee you've paid. Then compare those charges with your bank's current or historical fee schedule. If you notice any unexplained differences, contact your bank and request a review. Fee Category 6, Account Closure Fees. Now let's discuss account closure fees. Some banks charge a fee when an account is closed, particularly if it is closed shortly after opening. However, any such fee should be clearly disclosed in the account agreement or communicated through proper notice if it was added later. If you're planning to close an account and discover a closure fee you weren't expecting, ask the bank where that fee is disclosed in your original account agreement. If the fee was introduced after you opened the account, request documentation showing when and how you were notified. It's generally best to raise this question before the account is officially closed. Once the closure process has been completed, resolving the issue can become more complicated. If the bank cannot identify where the fee was disclosed, ask that the charge be reviewed before the account is finalized. A simple step you can take is to call the bank before closing your account and ask whether any closure fee applies. If the answer is yes, request the section of the account agreement that explains the fee and keep a copy for your records. What to do if the bank says no. The examples we've discussed cover many of the most common banking fees that customers question. In many situations, a clear and well-documented request is enough to resolve the issue. However, if your bank refuses to review the charges or if the total amount involved is substantial, your next step may be to submit a formal written complaint. Unlike a phone call, a written complaint creates a documented record of your concerns and gives the bank an opportunity to provide a formal response. An effective escalation letter should include 4 key pieces of information. 1. A clear description of the fee you are disputing. 2. The date the fee was charged. 3. The amount of the fee. 4. A concise explanation of why you believe the charge should be reviewed, supported by any relevant account documents or fee schedules. Keeping your request factual, organized, and well-documented often leads to a more thorough review than repeated phone calls alone. When preparing a formal written dispute, there are 4 key details you should always include. First, clearly identify the fee you are challenging, including the date it was charged and the exact amount. Second, explain why you believe the fee should be reviewed. If your concern relates to federal consumer banking rules or your account agreement, mention the specific regulation or disclosure requirement that you believe applies. Third, summarize your previous communication with the bank. Include the date of your call, the name of the customer service representative, and the response you received. Finally, make a clear request. Ask the bank to either reverse the disputed fee or provide written documentation explaining why the charge was valid under the terms of your account. Whenever possible, Send your letter to the bank's compliance or customer advocacy department rather than a local branch. Sending the letter by certified mail or another trackable delivery service provides proof that your request was received and creates a documented record of the dispute. You can usually find the appropriate mailing address on your bank's official website or by calling customer service and asking for the mailing address of the department that handles formal complaints. Bonus tip: when to contact the CFPB. If your written complaint does not resolve the issue within a reasonable period, you may consider filing a complaint with the Consumer Financial Protection Bureau, CFPB. The CFPB reviews complaints involving many financial products and forwards eligible complaints to the financial institution for a response. Banks are generally expected to respond within established timeframes, and the complaint process often encourages a more detailed review than routine customer service channels. When filing a complaint, include copies of your account statements, your written dispute, any supporting documents, and the bank's responses. The more organized your documentation is, the easier it will be for the issue to be evaluated. Final thoughts. The most important lesson from today's discussion is simple. Understanding your account terms and knowing your consumer rights can make a significant difference when questioning bank fees. Many fee disputes are resolved not because customers argue louder, but because they provide clear documentation, ask informed questions, and request a formal review when necessary. The 6 categories we covered today: monthly maintenance fees, overdraft fees, paper statement fees, minimum balance fees, wire transfer fees, and account closure fees, are among the most common charges customers should periodically review. You don't need to memorize complicated legal language. Instead, focus on understanding your account agreement, keeping good records, and communicating your concerns clearly and professionally. Knowledge is one of the most valuable financial tools you have. Taking a few minutes to review your statements, compare them with your account agreement, and ask questions when something doesn't seem right could help you avoid unnecessary charges in the future. If you found this information helpful, consider sharing this video with a parent, relative, friend, or neighbor who manages their own bank account. Many people never review their banking fees, and a simple conversation may help someone identify charges they didn't realize they could question. Thank you for watching. In our next video, we'll discuss another important financial topic for retirees and explain practical steps you can take to make sure you're receiving every benefit you're entitled to. See you in the next one.